Welcome to this deep dive. Today, we are going to be exploring some really fascinating developments in Indian business,
Okay.
specifically investments and
All
acquisitions.
right.
We've got a mix of news articles for you covering major deals and even some regulatory changes that could really shake things up.
Interesting.
Our mission by the end of this is to help you understand what's driving these moves
Okay.
and what it all means for the future of Indian businesses.
I think what's really striking is how Indian companies seem to be at a crossroads right now.
Yeah,
You've got traditional giants adapting to the new landscape,
right.
new players kind of disrupting the market,
Mm-hmm.
and a global landscape full of both risk and opportunity.
Yeah, let's start with the snack food industry, shall we?
Okay.
We see two very different stories playing out.
Okay.
We've got Haldiram's,
Yeah.
the iconic brand
Everybody knows Haldiram.
everyone knows and loves,
So cool.
valued at a massive $8 billion.
And they've caught the eye of global investment giant Blackstone,
Oh, wow.
which initially wanted a majority stake.
Really?
But Haldiram's seems hesitant to give up control.
Interesting.
And Blackstone is now looking at a much smaller slice,
Yeah.
somewhere between 15 and 20%.
That's a pretty big shift.
Yeah.
What could be behind Haldiram's reluctance to give up more of the company? I mean, they're already a household name.
Well, it could be a fear of brand dilution.
Okay.
You know, if Blackstone had a controlling stake,
Right.
they might push for changes that could alter the brand's identity.
Interesting.
Haldiram's might also be concerned about clashing management styles,
Oh, that's a good point.
or simply wanting to retain decision-making power in key areas.
So it's not just about the money, it's about protecting what they've built.
Exactly, and this is in stark contrast to Tagzi Foods,
Okay.
a newer snack company that operates directly to consumers,
Uh-huh.
what we call D2C.
Right, D2C.
They were recently fully acquired by Reliance Consumer Products for about $3.5 million US.
Now that's interesting. What made Tagzi Foods so attractive to a giant like Reliance? What does this tell us about the D2C landscape?
Reliance might see Tagzi as a way to quickly tap into a growing market segment.
Okay.
D2C brands often have a strong online presence and loyal customer base,
Mm-hmm.
something that a traditional giant might struggle to build from scratch.
Right.
This acquisition could give Reliance a ready-made platform to reach new consumers.
It's almost like Reliance is saying, we want a piece of that D2C action and we're willing to pay for it.
Yeah, but yeah.
So you've got one company holding on to its independence and another embracing a full acquisition.
Right.
What's the key takeaway for someone listening to this?
I think it highlights the multiple paths to success in the Indian food industry.
Okay.
Established brands like Haldiram's might prioritize control and legacy,
Mm-hmm.
while newer D2C players like Tagzi might see acquisition as a fast track to growth and a wider market reach.
That's like choosing your own adventure in the business world. You've got to decide what kind of company you want to build
Right.
and what role external investment plays in that vision.
Absolutely.
Now let's switch gears to the tech world where things are equally exciting.
Absolutely. We've got news from Pavestone VC,
Yep.
a Hyderabad-based firm that just closed its first fund with a whopping $97 million US.
Wow.
That's a serious vote of confidence from investors.
And here's where it gets really interesting.
Yeah.
They're not chasing after the typical consumer app craze.
Right.
Pavestone is focused on B2B tech companies, specifically in deep tech and enterprise tech.
These are areas that might not make headlines, but they're crucial for businesses to operate and innovate.
Okay.
Deep tech refers to companies working on cutting-edge technologies,
Right.
like artificial intelligence and advanced materials,
Okay.
while enterprise tech focuses on software and services that help businesses run smoothly.
Okay, that makes sense. So they're investing in the behind-the-scenes heroes of the tech world.
Yeah. Exactly.
Yeah.
And to give you a sense of what they're backing, let's look at some of their portfolio companies.
Okay.
E42 is using AI to transform businesses.
Uh-huh.
New Space Research and Technologies is literally reaching for the stars with space tech.
Wow.
LiveEnsense is bringing the Internet of Things to farms,
Okay.
and Bellatrix Aerospace is developing, wait for it, rocket propulsion systems.
Wow. So they're not just talking about innovation, they're backing it up with serious money.
Yeah.
This tells me that Indian innovation is happening on multiple levels, not just in the flashy consumer space.
Absolutely. And I think it's a wake-up call for anyone who thinks Indian tech is just about app-based services.
Yeah.
There's a whole world of innovation happening in areas like deep tech and enterprise tech, and it has the potential to transform industries.
It's a reminder that sometimes the most impactful technologies aren't the ones that you see every day,
Right.
but the ones quietly working in the background to make everything run smoothly.
Exactly.
But let's pivot now to something completely different. Gautam Adani's massive $10 billion commitment to U.S. energy security and infrastructure projects.
Now that's a headline grabber.
It really is. Why would an Indian conglomerate make such a huge investment overseas? What's the strategy behind this?
That's the million-dollar question.
Yeah.
We know Adani publicly congratulated Donald Trump,
Mm-hmm.
who was just reelected,
Right.
on his win.
Yeah.
This suggests he might be betting on closer India-U.S. ties under Trump's second term.
That adds an interesting layer to this whole story. It's almost like he's anticipating a specific geopolitical landscape and positioning himself accordingly.
Right. But the details of Adani's plans are still vague.
Oh, really?
What kind of energy and infrastructure projects is he eyeing?
Right.
What does this signal about his ambitions beyond India? It's a bold move with many unknowns, which makes it even more intriguing.
I love a good mystery.
Me too.
It's a reminder that Indian companies are increasingly thinking globally and making waves on the international stage.
For sure.
Now let's shift our focus to something that could be a game changer for startups.
Okay.
SEBI India's market regulator
Yeah.
is proposing some significant changes to angel fund rules.
This is something to pay close attention to.
Yeah.
Angel investors are crucial for those early-stage companies trying to get off the ground. And any changes here could have a ripple effect throughout the entire startup ecosystem.
So what are these proposed changes and what could they mean for the future of Indian startups?
Well, one of the key proposals is to raise the investment limits, potentially allowing more money to flow into startups.
Okay.
Currently, the cap is 100 million rupees,
Right.
and they're proposing to increase it to 250 million rupees.
That's more than double.
It is.
And it's not just about the amount of money, right?
Yeah, right.
They're also looking at who can be an angel investor.
Yeah, they're considering relaxing diversification rules and allowing new investor categories like family trusts and corporations to participate.
So on the surface, it seems like they're making it easier to fund startups, which sounds great for entrepreneurs looking for capital.
Yeah.
But there's usually a flip side to these things, right?
Your sharp SEBI isn't just loosening the reins.
Okay.
They're also advocating for stricter scrutiny of investors and requiring more investors per deal.
That's interesting. Why the added caution?
It's all about balance.
Okay.
By increasing the pool of potential investors and the amount they can invest.
Right.
SEBI's trying to inject more fuel into the startup engine,
Okay.
but by tightening the due diligence and spreading the investment risk, they're also trying to prevent reckless investments and protect the market from potential bubbles.
It sounds like they're trying to strike a delicate balance between encouraging investment and protecting the market.
Yeah.
But what does this mean for someone who's either seeking funding or thinking about becoming an angel investor themselves?
Well, these changes could be a turning point.
Okay.
Easier access to capital is always welcome,
Right.
but increased regulation could create a more complex landscape to navigate.
So it's a mixed bag full of potential, but also some new challenges.
Exactly.
Definitely something to keep an eye on.
For sure.
But speaking of challenges, we need to talk about what's happening with the Indian stock market.
Uh-oh.
It's been on a bit of a downward slide recently.
Yeah.
A 6-day losing streak, to be precise.
Okay.
Dropping over 4% during this period and more than 10% from its September highs.
It's definitely something investors are watching closely.
So what's driving this downturn? Is it just a temporary blip or a sign of something more concerning?
Well, there are a few factors at play.
Okay.
One is the strengthening U.S. dollar.
Okay.
Donald Trump's re-election and rising bond yields in the U.S. are making the U.S. market more attractive to investors.
Okay.
And some are pulling out of emerging markets like India as a result.
So it's not just about what's happening in India. Global events can have a big impact.
Exactly. When the U.S. dollar strengthens, it makes investments in other currencies less attractive.
Right.
Especially when those bond yields are rising, signaling potentially better returns for investors.
Interesting.
But it's not just the U.S. dollar we need to consider.
Okay. What else is contributing to this downturn?
We've also got some internal factors adding to the pressure.
Okay.
There are concerns over delayed rate cuts by the RBI, slightly weaker than expected Q2 corporate earnings,
Right.
and foreign investors selling off some of their holdings.
So it's like a perfect storm of unfavorable conditions.
You could say that, and to really drive home the point, the rupee has hit a historic low of 84.0 against the dollar.
Wow, that's a pretty striking statistic that really captures the current economic climate.
Yeah.
So we've got a mix of global and local factors contributing to this downturn.
hmm It's a complex picture, that's for sure. But even with these market jitters, we're seeing incredible investments like the ones we discussed earlier. And it all circles back to the idea of Indian companies finding their place in a rapidly changing world. Take Haldiram's, for example.
Mm.
They're not immune to these market forces, but they seem to be playing a long game.
Let's go back to those snack giants for a moment. Why would Blackstone be so interested in a company like Haldiram's, even if it's just for a minority stake? What's the appeal?
Haldiram's isn't just a snack company. It's deeply ingrained in Indian culture. It represents a certain taste of home, and that kind of brand recognition is incredibly valuable, especially for a global investor like Blackstone who wants to tap into the Indian consumer market.
So it's more than just snacks. It's about buying into a piece of India's cultural identity. But I imagine there's more to it than just nostalgia, right?
Absolutely. Haldiram's has a well-established distribution network and a loyal customer base. They've got the manufacturing, the logistics, the brand loyalty, all the ingredients for success. And Blackstone, with its resources and global expertise, could help them scale even further. Maybe even take Haldiram's beyond India's borders.
So for someone listening who might be building their own brand, this shows how heritage and innovation can work together. Haldiram's is a classic example of a strong brand built on quality and tradition, but they're also open to strategic partnerships that can unlock new levels of growth.
Exactly. And this idea of strategic partnerships brings us back to Pavestone VC
Hmm.
and their focus on B2B tech. Remember, these aren't companies that are going to be household names, but they're solving some of the most critical challenges businesses face today.
Can you give me an example? What kind of problems are these companies tackling?
Well, think about E42, one of Pavestone's portfolio companies. They're developing AI-powered solutions that can automate complex business processes. From customer service to data analysis, this is the kind of technology that can make businesses more efficient and ultimately more profitable.
So not as flashy as the latest social media app, but potentially much more impactful on a company's bottom line.
Precisely. Then you've got new space research and technologies pushing the boundaries of space exploration and satellite technology. This has far-reaching implications for everything from communications and environmental monitoring to national security.
It's mind-boggling to think that an Indian company is playing a role in shaping the future of space exploration. What about the other companies Pavestone is backing?
Well, LiveNSense, with their IoT solutions for agriculture, are tackling critical issues like crop management, irrigation, and pest control. Think about the impact of using technology to improve food security and sustainability in a country like India. That's a big deal.
This is a great example of how technology can be used to solve real-world problems. It's not always about the most glamorous or consumer-facing ideas, but about finding solutions that businesses and industries desperately need.
And that brings us back to Gautam Adani and his bold move in the U.S. It's a high-stakes game. He's playing with potentially massive rewards. But it also comes with its fair share of risks.
What kind of challenges do you think he might face?
Well, there's always political risk. Adani seems to be betting on a continuation of the Trump administration's policies. But what if the political winds shift?
That's always a possibility, especially in today's world. What about challenges beyond politics?
Well, think about the logistics of executing massive infrastructure projects in a foreign country, navigating regulations, securing permits, managing logistics across borders. It's a complex undertaking, not to mention the potential cultural and economic differences he'll need to navigate.
It's not for the faint of heart, that's for sure. But if he pulls it off, the payoff could be huge.
It could reshape the energy landscape and put Adani on the map as a global powerhouse. But it's a reminder that big bets come with big risks.
This is a great example of calculated risk-taking. Adani's move shows that sometimes you have to make bold decisions to achieve outsized returns, but those decisions need to be informed and backed by a solid plan.
Exactly. And speaking of navigating complex landscapes, let's circle back to those SEBI changes and unpack what they might mean for the average investor.
Okay, let's dive into that. You mentioned that these changes could create more opportunities for people to get involved in the startup ecosystem.
That's right. Higher investment limits and a wider pool of eligible investors could mean more funding flowing into promising early-stage companies. This could be a real boon for startups struggling to secure funding.
So potentially more money for startups, which is a good thing, right?
It certainly can be. But it's important to remember that investing in startups is inherently risky. These are young companies, often with unproven business models and limited track records.
So it's not like buying stock in a well-established company that has a proven track record. It's a different ballgame.
Exactly. That's why SEBI's push for stricter scrutiny of investors is important. They want to make sure that people putting money into these funds understand the risks involved and have the financial capacity to handle potential losses.
So for someone listening who might be excited about investing in the next big startup, it's crucial to do your homework. Understand the risks, diversify your portfolio, and don't invest more than you can afford to lose.
That's excellent advice. While some startups might become the next unicorns, many others will fail. It's a high-risk, high-reward game.
You've got to be prepared for both the ups and the downs. But let's zoom out to the bigger picture for a moment. We talked about the Indian stock market and its recent struggles. What does this downturn mean for the average investor? Should we be panicking?
Panic is never a good investment strategy. It's important to remember that the market is cyclical. It goes up, it goes down, and over the long term, it tends to trend upwards.
So this too shall pass.
Most likely. But that doesn't mean we should ignore the signals the market is sending. The weakening rupee, the foreign investors selling these, are indicators that some investors are losing confidence in the short-term prospects of the Indian economy.
What advice would you give to someone who might be watching their portfolio shrink and wondering what to do?
The first thing is don't make any rash decisions based on short-term market fluctuations. Remember your long-term financial goals. Those haven't changed.
So stay calm and carry on.
Essentially, it might be a good time to review your portfolio and make sure it's still aligned with your risk tolerance and investment goals. And if you're feeling uncertain, it never hurts to consult with a financial advisor.
That's sound advice.
Yeah.
And this downturn might even present some buying opportunities for those with a long-term perspective.
Absolutely. When prices dip, it can be a chance to pick up quality stocks at a discount. But again, do your research, understand the fundamentals of the companies you're considering, and don't let emotions drive your decisions.
We've covered a lot of ground in this deep dive. Snack food giants, cutting-edge tech, global ambitions, regulatory changes, and even a stock market dip. It's been quite a journey through the Indian business landscape.
Yeah.
What stands out to you from all these stories?
I'm struck by the incredible resilience and adaptability of Indian businesses.
Yeah.
We see companies like Haldiram's
Right.
holding on to their heritage while exploring these strategic partnerships.
Mm-hmm.
At the same time, you have startups
Right.
pushing the boundaries of technology and conglomerates like Adani making bold moves on the global stage.
It's fascinating to see how these different approaches are shaping the future of Indian business.
Yeah.
What do you think are the key factors driving this evolution?
It's a confluence of forces. You have global trends impacting local markets,
Right.
rapid technological advancements changing the rules of the game,
Uh-huh.
regulatory shifts, opening up new possibilities, and of course the entrepreneurial spirit of India's people.
Yeah, it sounds like a dynamic and exciting time to be involved in Indian business.
It absolutely is. There are challenges, no doubt,
Right.
but there's also an incredible amount of energy, ambition, and potential.
So as we wrap up this deep dive, what's the one key takeaway you'd like to leave our listeners with?
I think it's this. The future of Indian business will be shaped by those who can navigate this complex landscape.
Mm-hmm.
It's about balancing tradition and innovation,
Right.
local and global ambitions,
Yes.
and carefully calculated risks and opportunities.
That's a powerful thought. It's not just about riding one trend or sticking to a single strategy.
Right.
It's about being adaptable and strategic in a world that's constantly changing.
Exactly. And that applies whether you're thinking about building a company,
Mm-hmm.
investing in one, or simply navigating your own financial future.
So where do you see yourself in this dynamic landscape? Maybe you're inspired to build the next Haldiram's, invest in a groundbreaking tech startup, or perhaps explore global opportunities like Adani. The key is to stay curious, informed, and engaged.
Well said. There are incredible opportunities out there for those who are willing to dive deep and explore.
And on that note, we've reached the end of our deep dive for today. Thanks for joining us on this exploration of the Indian business world. Until next time, keep exploring and stay curious.